Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Sean M., Joe G., Jackie A., and Brent S. We have a returning guest on the program today. Mr. Mark Chalmers is back with us. Mark is the president and CEO of Energy Fuels, a U.S.-based production and development company focused on conventional uranium, rare earths, and vanadium production, centered around the licensed and operational White Mesa Mill in Utah and surrounding projects within the Great Basin region. Energy Fuels is listed on the New York Stock Exchange under the symbol UUUU, as well as on the Toronto Stock Exchange under the symbol EFR. Mark, it's been a while. Welcome back.
Hey, Andrew, it's great to be back. So yeah, it's been a while since we've talked last.
Likewise, Mark, it's always good to chat with you and always just enjoy our conversations. And of course, they've gone back many years to the beginnings of this cycle, essentially, and really appreciate you coming back. And you've got a special place here because you were actually, I think, the first guest of our podcast when we kicked this off many years ago. So congratulations on that, and congratulations on the progress at Energy Fuels so far.
Yeah, a lot happening. And Andrew, as you know, we have our roots in the uranium business and vanadium business, but we've expanded into the rare earths, which is a very exciting place to be. And we're making great progress on all those fronts.
Well, Mark, you are no stranger to the program, of course, having been on numerous times going back nearly 5 years now. So why don't we get right to it here and have you just give us your opening thoughts on the status of uranium first, and then also I'd like to have you talk about rare earths briefly and how the market's going there and just your views on that. And then, of course, if you have a bit of time, the vanadium market as well.
Well, it's an exciting time in uranium. Certainly, uranium prices have been going up. Almost every forecast is predicting increasing uranium prices. The sentiment for nuclear power is going forward in leaps and bounds, with people focused on reducing carbon emissions, baseload energy. When I was in W&A in London a few weeks ago, it certainly was a buzz on the future of nuclear. And as I said, all the supply demand graphs are showing increases of demands, small modular reactors. I mean, there's really a lot to talk about on the uranium front, but also, we're seeing, political instability, obviously with Russia and the Ukraine conflict, Niger, and so, there's a number of moving parts, and on the uranium sector, it usually doesn't move for just one thing. It usually moves on three or four smaller things that when you compound them, it becomes a big deal in the uranium space and starts moving uranium prices. So I think you're obviously seeing that now. So it's a great place to be. Now, our company, in addition to uranium, as you know, has a strategy on rare earths. And the reason we have that strategy is, again, it's a very critical piece of the puzzle on electrification at the most efficient levels. And it fits perfectly with our uranium story because when we're processing rare earths, we're also recovering uranium. And the best rare earth feeds contain uranium and thorium, and we have the ability to handle that. And so the market still values us as a uranium company, but I think we're going to be getting material value in due course as our rare earth strategy unfolds and progresses. Lastly, vanadium. Vanadium is a tricky element, but it is a critical element, and we have the only conventional vanadium processing facility in the United States, and we still have a number of uranium vanadium mines that can produce material quantities of vanadium in the United States of America. So bottom line, it's an exciting time on everything we do, and we either currently have or will have the ability to commercially recover approximately 10 critical elements on the list of 50 So that is, again, a substantial differentiator.
Absolutely, it is. How about you just touch on general operations update as far as the ongoing work at White Mesa, which you guys are actively working on a number of initiatives there, including future expansion, but just also talk about some of those initial restart projects that will come in as feed to White Mesa, operations update, and maybe that kind of 1 year outlook as far as operations are concerned.
Again, I'll start with uranium. With our uranium mines, we're actively developing our Pinyon Plain mine. We've got about 25 people working there right now. We'll be mining uranium next year there, around 750,000 pounds of uranium per year. We're also restarting two or three of our mines at the LaSalle complex, and we'll mine somewhere in the order of around 250,000 pounds there for a total of about 1 million pounds per year as the first step in restarting our uranium production. We still have Nichols Ranch on standby, which is an ISR facility, and we will fire it up in due course as these prices firm and we get more contracts. So we're going to go back into where we're mining about 1 million pounds next year at our conventional mines, and we will ramp that up as we get more uranium contracts and the price of uranium goes up. So we can get to about 2 million pounds per year with just basically working capital. We don't need a lot of capital because we already have this infrastructure in place, and that's a problem for people who don't. So we can get up to about 2 million pounds without major capital. Now, if we want to go to 3 or 4 or 5 million pounds, we've got to start spending in increments of about $100 million. So, but we can get there in due course. The mill, we have currently total, including finished goods that are not just at the mill, but also at the converter, we have about 1.2 million pounds. 800 is finished and 400,000 pounds is waiting to be processed at the mill. We are advancing what we call our phase one separation capabilities at the mill, and that is well advanced. We have equipment showing up, we have tanks, we have mixer settlers showing up, and that is the main focus at the mill right now. And we're putting the solvent extraction circuit in the existing uranium vanadium solvent extraction building. So it will be the only facility of its type in the world that I know of that can recover uranium, vanadium, and the NdPr and a samarium plus, which is a heavy carbonate concentrate, and that is full scale ahead. Now, next week on 10th and 11th, we're having a very significant open house where we're inviting people from far and wide, and we're very excited about that because of all the activity level that we have. And believe it or not, we've got Miss America coming as one of our speakers on the first day, which is quite unusual for going out to the sites, but we're very excited about that. In addition to White Mesa, we still secure monazite from Chalmers out of Florida and Georgia. We secured a very large land position called the Bahia Project in Brazil that we're currently been doing drilling on. We're not drilling this moment, but we will in the next month or two, advancing that to feed the White Mesa Mill. And we're also doing engineering work on what we call phase two, which will be a completely brand new crack and leach facility, standalone from the mill, and also have separation capacity in due course that could rival 75-80% of a Linus looking out a few years, 4 or 5 years, given substantial quantities of monazite. So to say that there's a lot going on is an understatement. We've been hiring people, and that's difficult, but we've got probably the most highly skilled uranium processing group in the United States over anybody that's out there, and we're very proud of that.
Good help's always limited. Good help and just decent people to work with, technical expertise, people that aren't too greedy, Mark, as you and I definitely see a lot of that in this sector. So I appreciate the update on that, and also just good luck with the open house there. I appreciate you sharing that, and I hope the bread breaking goes well with all the folks that are showing up there to check out the activities. And I do want to come back to a couple other things you did mention there, but before we do, why don't we just talk briefly the update on the capital structure here, just on the finance side. Give us just a quick view of shares outstanding at this point, the cash on hand, inventory, and if you don't mind, maybe some of the major shareholders.
We're zero debt. We've got probably the strongest balance sheet out there. We've been profitable for the last 2 years. We'll be profitable. We were profitable last year, this year. And that's mainly because we've been swapping uranium, selling uranium, swapping a few properties here and there. The last reporting period, we reported working capital of 135 million, and that's actually quite conservative because that values our inventory at uranium inventory at about $30 a pound, where now it's around 70. It values our vanadium. I think it's around $6 a pound, and vanadium's a little north of that right now. It doesn't include the note that we have with Encore, which incidentally they paid down 20 million just the last couple of weeks. They still owe us 40 million. It's a convertible note, and it's actually in the money right now. It doesn't include the investment we have in what is now ISO or will be ISO, which is somewhere in the order of 25 to 30 million dollars US. So it's really, when you add all that up, Andrew, with our working capital, we're well north of $200 million. So we don't have any real major shareholders. Our larger shareholders, BlackRock, they have about 5%. Some of the ETFs are shareholders. So we don't have any real, anybody that's north of about 6% as shareholders. I think the key thing for your listeners are that, one, we've been profitable. The last 2 years, we're always navigating, and because you eventually got to be profitable as a company, and we're proud of that. The zero debt, probably well over $1 billion of infrastructure that's fully permitted and ready to go. Having the team to execute, being in the United States of America, and having this capacity that we have, I think is pretty enviable.
I appreciate you sharing that off and providing that update. And with that, I want to get just your view here on specifically the rare earth side for a moment, just on the processing work that's ongoing. And you mentioned it before, just slightly there, the phased expansion work. But you've got phase one, you've got the light rare earth production progress, and then you've got phase two, phase three plans in terms of future work. Just talk about what you see really on kind of timing over the next couple of years to expand there through those phases, what that CapEx is expected to be to fund those expansions. It sounds like that's going to come entirely from cash flows, Mark, but do you plan to use a little bit of torque, maybe some debt financing leverage for that work as the market heats up?
Yeah, I mean, the phase one that we're doing right now, it's about $25 million to do this in the existing SX building that has a capacity to do up to 1,000 tons of NdPr, which, to put it into scale, is bigger than Silmet, or equal or bigger than Silmet in Estonia. Linus does about 6,000 tons of NdPr currently. So it's actually large, world significant, but it's small compared to Linus. But for a first step, we see it as very significant. Okay, so we've done that all out of a treasury because it's a small amount. We'll have that going early in next year. We're still securing feed for it, and that we hope to be telling the market on how that's building. The phase two, which we've done some PFS work on, and we're going to go into more detailed engineering next year, and that will take it up probably 3-4x what phase one is. A completely separate building, completely separate building, brand spanking new. The PFS numbers, and we don't give out really hard numbers, but estimated at somewhere in the order of maybe 3 to 350 million, somewhere in that order for phase two. But that would be able to approach, say, 75% of Linus processing capacity, which is quite low compared to what others are going to have to spend to build out that processing scale. And the reason it's low is because it's in Utah. We've got a very reliable workforce in Utah, compared to operating in places like Australia where people are very expensive. Power is very expensive. Water is very expensive. Everything's expensive in Australia. We think Utah is a great place to do business. So that is the next step, and we're trying to secure material feed to fill that next step. And then phase three is the heavy separation. So we're going to start piloting that probably be early next year for heavy separation. And we don't have an exact number, but it's probably in the order of $50 million for a heavy separation plant in due course. So those are kind of the steps. How we finance that in this new world we're in that's focused on these energy transition elements, that is not going to be a problem. We have no concern that we can't finance our activities, whether it be through some sort of a government program or through some of the tier ones, whether it's debt, equity, or some other loan mechanism. That's the last thing from our mind, is that we're going to be able to finance this.
Appreciate that. Lots of stuff happening there on the rare earth side, and looking forward to seeing some of the progress on that front. With that, just the monazite sand feed. You mentioned the project before, but the Bahia project in Brazil. Just talk about any particular plans there for work. Is there anything immediately on the books to actually get some work done down at that project?
Well, we've got a sonic drill rig that's on the water heading that direction. We're getting started on the initial permitting in Brazil. We've done some drilling already. We've been doing some metallurgical testing, sending it out to the various laboratories that particularly focus on the heavy mineral sands. And so we're going to ramp that up as quickly as we can. We already have this small amount of monazite coming from Chalmers, but we're also looking at other arrangements. And I've said this before, we're talking to everyone out there in the business that we know of to supply monazite to White Mesa, and that includes potential M&A transactions. We are looking to build a world significant rare earth processing facility in the United States, in Utah. So we are being aggressive but not reckless. We are going for it. And again, we have a very strong balance sheet to do so.
Mark, I want to shift over back to uranium here for a moment and just talk on a few topics surrounding uranium, get your thoughts, because obviously it's a long time sector that you've been involved with. And of course, you've got your opinions and experience to share with us on various topics. But just on the company front here briefly, the contract book of the company, if you can, I know some of this will be sensitive and you may not be able to mention, but maybe talk about what years or that range you're looking to take on further contracts for deliveries, what type of contracts you are seeking based on your understanding of this market and where it's headed, and of course the market conditions. And then also just the existing book on hands in terms of capacity filled out, and what you think you have left there. If you can just share a few ideas on timing, contract book, and just your overall thoughts on how you guys would fill that out. Of course, what you can.
Yeah. Well, the current contract portfolio we have consists of 3 contracts with 2 nuclear utilities in the United States. They don't want us to talk about who they are. They have floors and ceilings and a formula in between. Everything is escalated, including the floors and ceilings. We have already delivered product into 2 of those contracts this year. And so we've started filling those. They go out to 2030, so out 8 years. And they kind of ramp up a bit more in the later years. But there's generally, if you average them out, it's probably 500,000 pounds or so of contracts. And we can make money on those contracts. We haven't signed anything that we can't make money on. That gets the flywheel going, particularly Pinyon Plain and LaSalle, but we're also looking at that next rung, which is another few contracts that are at higher prices with higher floors, higher ceilings, also on a similar mechanism where they'll float with the price to an extent within the range of those the floors and the ceilings. So you're definitely seeing utilities coming to the market. They have more certainty now when it looks at looking out to the future with the support for nuclear power, and that's good because we need to get more product coming out of the United States and particularly our allied countries in a reliable way. The other thing is that the focus on all these other small modular reactors, micro reactors. So yeah, I don't know. Is there anything else you want to know on those? But we're gonna do it in steps. Like we have say in the order of 500,000 pounds contracted, and then we'll move up to say 1,000,000 pounds per year contracted, and we'll just keep going up as the contracts are available and we sign them up.
I think you covered it sufficiently for me. Can't speak for the audience, Mark, but it appears you guys have been very conservative in your approach here, and this is going to stair step up as things ramp up, if you will. Pretty suitable in that sense. And then also, I guess it ties into my next topic here, just on the White Mesa production. As you know, and as we've talked in the past, Mark, of course, that White Mesa's never reached a nameplate capacity for uranium production, not even close. And that's for a number of reasons, of course. But what is your goal this time in terms of reaching potential new highs on production, testing those limits of White Mesa? And then also just, generally, where do you think some of that source comes from? Because a good amount of that feed is going to come from the company projects, but, what's your view on that? And of course, I know it's market sensitive, but where some of this material might come from.
Yeah. Well, I mean, between Nichols Ranch and White Mesa, yeah, we've got a license capacity of 10 million pounds. Okay, now, being able to get there is a big ask, but we can get up to, well, next year, where we are at this moment, we'll get up to about 1 million pounds per year. We have the capacity to get up to about 2 million pounds per year with limited capital, which again, people think, oh, it's only 2 million. Well, the U.S. over the last 15 years got up to about 5 million total from 2006, 7, 8, 9, 10. It got up to 5. So 2 million is a lot, okay, in the United States, at least currently. Now, if the price of uranium goes up to, 90 or 100 or, higher, we can go higher than that. But so right now with White Mesa, we're going to get up to 1 million pounds per year starting this coming year, up to 2 million pounds. We will build this second rare earth processing facility, be completely independent of the mill, and we will be looking for other feed from other sources. We have a toll milling agreement with what's now will be ISO. We probably will at some stage go out for a buying schedule. We probably won't do any other toll milling agreements because most people will not provide enough feed to justify a toll milling agreement. And in due course, we'll put out a toll milling agreement, and we'll just keep trying to amp up that production out of White Mesa. In the 80s, I used to feed White Mesa, and we got it up to about 4 million pounds per year at the White Mesa Mill, which is half of its licensed capacity. So we say as a company that we can get to the 2 quite easily, relatively quickly, and with limited capital, and we can go up to 4, 5, 6 million pounds per year, given the market supporting that, and starting to spend probably in the order of around $100 million for every million pounds you go above that. So that's 2 million. So it's somewhere in that order. So does that give you a little flavor?
It does, absolutely. 4 million is a big number for the U.S. Generally, it's a drop at the pond compared to the need of the global requirements, Mark, as you know, but definitely 2 million pounds is a big number for the U.S. 4 million is just, I think, job well done. If it's coming out of just energy fuels, that's impressive. So yeah, it does give us a flavor here. And then just the constraints on the conventional domestic supply side has obviously got some significant issues just with, too small of projects and capex and the various other factors. And then the bottleneck that is there on the milling side, of course, but good on you. You guys have a good setup. On another topic there, Mark, obviously with your experience here because of your past experience in the States on production, conventional, and then also conventional production in places like Namibia, for example, there's really kind of a separation about production and those who have done it, those who potentially could be new stars in the sector, Mark, and then the larger pot of those who really won't make it. We're getting to that point of separating the groups of companies within the development and production segment that either produce as they have proclaimed or they come up short and the market responds accordingly. We're already starting to see some of that separation now. What are your thoughts on this, kind of the fakers versus the people who can do it?
It's a very important point. If you go back to the last run up in that 2006, 7, 8 period, W&A did a review. I think they said in 2008, they looked at everybody that said what they said they were going to do. Then they looked at it, I think it's 2012 or 13, something like that, 5 years later, and they added up all the plans, and then they saw what the realities were. And it was like 9% of what people said actually made it to the market. Okay, now you did have Fukushima, but only 9% came. And then if they went out another year, because Cigar Lake was in that mix, it went up to like 22%. Okay, so that's a long ways from 100%. All right. Yeah, you're going to see that again. I'm not saying it'll be those low levels, but it's going to be, it's going to be low levels. It's not going to be 100%. It's not going to be 75%. It's going to be a lot lower than that. How low, I don't know, but I think you are seeing some of those cracks already appearing. And investors just have to understand that there is a risk, particularly with new projects or projects that have failed in the past, and they're going to try to make them work again. So yeah, I mean, I don't wish bad on anyone, but there is substantial technical risks on all projects. Now, I think we're better ready now than we were this last run up because there were projects that got up and running this last run up that have been on standby, and they're maybe better understood. But there's also been a huge amount of high grading of a lot of projects around the world to survive after Fukushima. I mean, it's been 12 years, and a lot of the projects, including in Kazakhstan, a lot of the projects that I ran have high graded. Okay. And so it's really going to boil down to, how does the world go forward with older projects that are running out of ore, projects that have been high graded, projects that have unsolved technical risks that haven't been completely addressed or still unknown. It's going to be a bunch of those things all working in tandem to see how this thing ramps up. And frankly, when I look out with some of these new demand curves that are coming out of places like W&A, and I look out 10 years, I'm not certain exactly where all of it comes from.
Yes, fully agree with that, Mark. We're in the same boat. We don't know where it comes from either. And I guess I would just challenge any promoter, marketer, what have you, faker, whatever you want to call it, to actually try to get some technical expertise and technical skill and actually try to make a best effort to actually try to do something real. And that means cake in a can, and that means cash flow that's actually positive and not sucked out of your G&A to zero, if not negative, and just nothing more than a paper printer. It makes a lot of sense to at least challenge some of the folks in the industry to actually get off their chair and actually try. And so I think that that's important. And as you said, given your experience, the high grading, whatever it takes to make these things work. And of course, that was during a 12-year downturn that was absolutely terrible. And of course, that's what set us up for today. Of course, very good points. And I think that's a very good piece that the audience needs to hear.
Yeah, I just another comment. Yeah, this year it's 47 years I've been in this business, and I've done, I don't know, at least 10 projects, operating projects. None of them have failed technically. None of them. They've always achieved their design capacity, and we got them up and running. Some of them were harder than others. Now, I've had some failures just because of the price uranium dropping to $7 per pound, or Fukushima, or a black swan that kind of killed the uranium market for a number of years. But they were always able to produce what they were supposed to produce in time. It took a little tweaking here and there to get them up and running. It takes a lot of finessing to get these things up and running, but whatever that's worth, yeah, I've done a few.
Okay, just a few other things here, and then let's wrap up. Mark, just cover off some of the community efforts at the company, what you're doing to gain the support of not only the local community about the importance of energy supply chains, but also specifically to help educate people in the government about the importance of domestic supply chains that are self-sufficient and healthy.
Well, we're doing more than we've ever done, and you know that on the government perspective, our company with UR Energy filed the Section 232 with the government, and a lot of that work that was done 5, 6 years ago really helped start educating people in the government about our vulnerability. Um, going back 5 years ago. So, and I think people are getting it now when they see the dependence on Russia and that we're not sanctioning uranium from Russia or nuclear fuel products from Russia, because if we do, we may run out of uranium. So on the government front, I think you're seeing more bipartisan support, and I think that will continue for all the right reasons. In the community, we've never done more when it comes to our communication with the local communities. We set up a foundation. We put $1 million into it. We've committed 1% of our revenue from White Mesa going forward. We're making awards left, right, and center. We've got a advisory board chaired by a Navajo veteran, which we're very proud of. Ryan Benali is chairing it, doing a great job. And we have a White Mesa Ute also on the advisory board. They have a website that people are putting in requests for funding of worthwhile projects. And we've been doing assisting with STEM education on the reservation. We've been doing work on a heat system for the Dinosaur Museum, scholarships, the football team, helping some of the local chapter houses with various projects they have. It's been incredible, and it's starting to pay off with those efforts, and we're starting to get some real traction around all our sites on all the great things that we're doing as a company.
Congratulations on those items, Mark. Appreciate the efforts there. And I know that's really important in the community in that area. This is a substantial contribution by Energy Fuels to the community in that area and the work you guys are doing, as well as helping the bureaucrats understand how these markets work. And I think that's absolutely really critical in this day and age. Thank you for that. Mark, just on a personal note, what are your goals as far as what you'd like to finish up for this company? And also, how long do you plan to stick around? Because you and I were both getting older, in your leadership role, which is fantastic. What's the plan kind of for Mark, and how do you see this going forward?
Well, I am getting older, but I've never had so much fun. I'm still working with the board on a sort of a longer term relationship that goes for a number of years with the company. My goal is to get this critical mineral hub going to where it can't be stopped, to where the combination of these 10 or so elements that I'm talking about of the 50 are being produced profitably and at material scale in making it, again, world material. And I think we're going to get there. And that's something that I'm committed to continuing full time for a number of years to get there. Because it's not just the job I do, it's a passion that I have. And really, it's just something I want to get done because I think it's just a remarkable opportunity and it's a lot of fun, a lot of work. So I wanted to get to where, we've got a number more of these dots connected and people can see that it is happening and there's no stopping it.
Mark, appreciate that. Last question, bit of a fun one. Should we make investments into companies like Energy Fuels solely based on the ESG score shown within our broker account on our mobile phones?
No, no. I mean, make an investment because you believe that the company is going to continue to generate value. And in our case, make your investment knowing that we are focused on energy transition and there's only so much product to invest in. That and the fundamentals. We're going to. It's my goal to grow this into a multi-billion-dollar company that, again, as I said, is world material. But at the same time, when you look at ESG scores, I frankly, we're on the ground just doing stuff right now, and we're doing the right thing. We're doing the right thing at all our sites when it comes to ESG, and particularly with things like the foundation. So invest because you believe that that's the future. Growth is there and compelling on the companies, not necessarily with their ESG score. But listen to what they're saying, because you can't be in this market now as a public company and not be focused on ESG.
Good and sensible business practice. And that's something that any decent person would do. Well, Mark, look, thanks for the time. Let's leave it there for now. And for potential investors who are listening in, Energy Fuels has a market capitalization of about 1.3 billion US dollars. Why should investors consider the company at this stage?
Well, because my objective is to grow it to a multi-billion-dollar company that again is world significant. I think we're valued as a uranium company, and we're not valued as a rare earth company. And if we can show that we're chasing after the company, the likes of the Linuses, the MPs, even the Alucas to a certain extent, that's where a lot of additional value creation is going to come when people realize we are going to make it.
Mark, a best way for folks to reach out to the company?
People can reach out to me directly. Curtis Moore handles a lot of the people that reach out. So either myself or Curtis. And so, you can send an email to me or you can contact Curtis. Usually he's got his contact details on our press releases, or just send an email to, I think it's info@energyfuels.com. We're always open to talk to people. People that are interested in our story, we'll talk to them.
Mark, always a pleasure. Thank you for the updates. Keep up the progress, and let's chat again soon.
Okay, my pleasure.